going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a wonderful start to your week. Bitcoin had an incredible weekly close. Not only that, but we broke above not one, not two, my friends, but three. In fact, the three most important resistances. We had the two downward sloping and the horizontal that I said we had to break above. And you guys know that I've been saying I am incredibly bullish going into April. I think April is going to be a very, very good month for Bitcoin. In fact, right now, we have so many indicators I got to go over today that are flashing all of these different bullish signals. And one of them in particular, which we have talked about, the last time that Bitcoin did this, it pumped 700%. So could we be looking at the start of a massive rally, or like some of these bears out there are still claiming that this is just a relief rally in a bear market? We're going to talk about that because there is something happening right now. We do have the yield curve for the treasury inverting, and the last time that this happened was about 16 years ago, and yeah, that was, not the greatest time exactly. That led into 2007, 2008. I don't think I have to tell you what that means. So should we be worried about a recession? Would that affect things like stocks and Bitcoin? And is this just the, rally that we should sell and get out of? Well, we're going to talk about that, guys, because we are definitely incredibly early right now. I'm going to show you more Bitcoin adoption that's happening right now. And if you haven't watched my last two videos, guys, you need to go back and watch them because there has just been so many bullish narratives and news and things that have been coming out lately to not be excited about Bitcoin and cryptocurrency right now. I don't know. Let me know why you wouldn't be, guys. But we will talk about what could potentially happen, obviously, with the government and all that other stuff. But stick around. If you are looking to trade, we basically nailed the absolute bottom with the Ichimoku cloud. Amazing. If you did take that trade, I will show you some of the key levels, though, that we do need to pay attention to. And obviously, friendly reminder, if you are going to Miami, April 6th through 9th, make sure that you come say hello to me because I will be in Miami as well. Industry Day conference. They have the Sound Money Fest. Pretty cool, guys. So if you want, you can actually pay in dollars or Bitcoin. You get 33% off if you use Bitcoin. And if you want an extra 10% off, make sure that you use the code ZOMBIE at checkout. And yeah, I do hope to see you there. And obviously, if you are not subscribed to the CryptoZombie channel, you've been missing out because we've been hitting some home runs lately and it has been a very exciting time. So we had been looking at this level for quite a long time. Perfect setups, perfect bottom. We had the trend going to the upside. We knew we had to break out of this blue zone. And today, we are just smashing resistance after resistance. Now, if we do have a candle close above this level, essentially, if we can close above 46,100, especially on the weekly, I think the next level is easily up here to about $52,000 for Bitcoin. And even just looking at these very simple historic trends that we have right here, you could see where Bitcoin sort of had a little bit of difficulty breaking above this level. We hovered in here for a little bit, right? You could see there was this sort of support right here. Well, currently, that is where Bitcoin is trying to break out of as well. So it is definitely looking like the bulls, even if you look at this. So remember, we were talking about this, either triangle or wedge pattern. This one's a little more concerning. You do want to see some structure get built up here. Could this be a fake out? Is there a potential to come all the way back down to 39,000? I'm not going to say that it's not possible. We do have to see how it plays out. But if we can get a nice candle close up here, then like I said, $52,000 is definitely the next target for Bitcoin. But like Bob Lucas kind of pointed out, he did a little bit of a Bitcoin forecast here using the 6-month chart. He says far less history, but progression to the 16-year cycle high is possible. And this is pretty crazy, guys, because if you look at this chart, this essentially can put Bitcoin at around $700,000 by sometime around 2024 or 2025. Now, this is coming from Bob Lucas, okay? He is a very well-respected trader, analyst in the space, and I definitely suggest you guys check him out. I do like his content, but if I had to say in the short term, if there was anything to be concerned about, it's just that we do have this CME futures gap right here at around 45,500. So you see, guys, right here, there is that possibility that we do come and try to close that gap. It wouldn't be impossible to see us come down here. We could even wick back to the blue zone down to 44,000, right? Sometimes it tends to overshoot it. But ultimately, in the short term, that's the only reason I don't see us continuing on a massive rally, instantly is just to come down and fill that. Not impossible. Coming back down to 44 to 45,000, very possible. And also that would coincide right here with the top of this resistance. You would be flipping resistance as support. And I'll tell you what, guys, not financial advice, but if you are trading, that is where I will be looking to put in my longs again right here. We already nailed the bottom right here. So if you are interested in learning how to trade, make sure that you get subscribed, watch these videos every day. This is the level right here I'm looking at, around 45,500 down to 44,500. I know that's a bit of a range, so if you are using a lot of leverage, that you could get wrecked, which is why I don't suggest using high leverage, 3x, 5x, anything more than that, and you're just like crazy gambling. But if you guys are interested in learning how to do that, I do have a tutorial popping up above. There's over $8,000 in bonuses below. Check those links out if you guys are interested. But one thing that El Crypto Professor pointed out, he said that Bitcoin is about to close above the EMA ribbon on the weekly. The last time that this happened, after a double bottom, we had a higher high, and Bitcoin went from $8,000 to $64,000, which is about a 700% increase. Next touch of the dotted line is a good indicator for a possible next top of Bitcoin, which he puts around 2023. We could see Bitcoin at 200,000, and I had told you guys that I did have that target of around 120 to 180,000 for Bitcoin at the end of this cycle. So this does actually play in perfectly. And you can in fact see that if you are looking at breaking out of this, getting back above this EMA ribbon on the weekly, yes, this was a massive, massive breakout move. We also had it down here as well. And the other thing to point out is that we've actually already had the weekly close. So it's already closed, guys. We've had it. We don't have to wait for it anymore. We got confirmation. This is definitely bullish. Like Rec Capital pointed out, recently Bitcoin reclaimed the pi cycle, 111-day moving average as support for the first time since last September. Okay, right there, boom. That also was a nice bounce, although we were on top of it at this point. But, even right back here, once we tested it, fake out, came above it, we still had a nice rally right here to around that sort of $52,000 level, which is why I say the $52,000 level is the next stop for Bitcoin. It is the next major resistance. And like Plan C pointed out, I know this is crazy. Like everything's firing bullish right now. For the first time since December 5th, this on-chain indicator, the short-term holder profit and loss ratio, 7-day simple moving average, has flipped bullish. Each of the 6 times that we flipped and held above 1 led a major impulsive uptrend. And you can see right here, every single time Bitcoin went on a massive blast off move. So let's talk about what's going on. Should we be getting excited? Was there enough volume? What happened? Well, a lot of it did in fact have to do with what was going on with derivatives. Realistically, we had a major short squeeze. So they, Santiment, they have their data over here. And essentially they say that the massive amount of shorts that were growing on exchanges is the primary culprit for this jump. Altcoins saw a huge short ratio at 1 p.m. UTC, followed by Bitcoin at 6 p.m. UTC, spiking off all of crypto. So should we be worried if essentially this is just what it was? If it was just a short squeeze and that's all it was, does that mean that we're not really out of the woods? Well, okay, fine, short squeeze, but we did just break above three of our critical resistances. I get it, short squeeze and all, but at the same time, that was very bullish. That was a very bullish move no matter how you look at it. However, breaking it down, as Glassnode said, as short sellers fueled Bitcoin's initial leg up, the rally wouldn't be sustained without organic demand. So are we seeing that organic demand? Well, the firm says it's looking at Bitcoin's number of addresses with a non-zero balance. They say what we can see is that over the last couple weeks, we've actually seen a bit of an acceleration. It's really starting to curl to the upside. So we are seeing that people, even though we're at depressed prices and even though we've been in what they would refer to as a bear market, because technically if you're under 20%, you're in a bear market. So technically Bitcoin's in a bear market, but Bitcoin bear markets are like 3 to 5 times more aggressive than standard bear markets. So really, when you look at the ultimate uptrend for Bitcoin, is Bitcoin in a bear market? Yes, technically. But for Bitcoin, for crypto, not really. Not really in Bitcoin terms, in Bitcoin world, right? But they say despite all that, all the geopolitical uncertainties, the macro headwinds that the Fed is hiking rates, all the risks in the economy right now, people are still accumulating. So if it was bearish with everything going on right now, with all of the geopolitical and economic uncertainty, why are they still buying? Well, they are in fact still buying. Now, something that just happened, you can see right here, David Ingles pointed it out, just happened. The US 5 to 30 curve inverts for the first time in 16 years. This is not necessarily a great thing. So, this was actually an article on CoinDesk was pointing this out. And if you don't know really essentially what this is, the spread between the yields on the 30 and 5-year government bonds have fallen under zero for the first time since 2006, which was 1 year before the great financial crisis of 2007 and 2008. So should we be trusting these rallies? Well, they go on to say that an inverted yield curve is widely read as a sign of impending economic recession, a significant decline in economic activity that lasts for months or years. According to the Federal Reserve, the yield curve has inverted before each recession since 1955, with the economy taking a hit between 6 and 24 months following the inversion. So is this just the last hurrah? Is the bubble about to burst? Are we going into a recession? Well, they say the latest curve inversion perhaps might indicate that the bond traders are skeptical about the Fed's ability to control inflation. Interest rate derivative traders are now anticipating, and listen to this number, an increased interest rate of about 218 basis points by the end of the year. That's the equivalent of 25 basis point rate hikes over the next 6 Fed meetings, which would be pretty incredible, right? Although, then again, not really that incredible, really, considering what we've done in the past. So, I guess the point is that it's bad, but it's not as bad as it has been, and a lot of people are assuming that they're probably gonna end up flaking out and probably pulling back, right? Because they don't want to cause a recession, right? But anyway, they say the yield curve doesn't cause the recession itself. It only represents how the bond traders see the economy. The yield curve inverts when traders sell short-term bonds and park their money in long-term bonds. It is a sign that investors expect long-term interest rates to decline, which typically happens during economic slowdowns or recessions. Now, even if we come over here and have a look at the S&P. The S&P had a very similar bounce as well. So granted, we still are seeing that correlation, still in a way between Bitcoin and the traditional stocks. But, over on Squawk Box, they did have Muhammad El-Arian, and he was sort of discussing what he had to say about it. Now, he's referring more specifically to stocks, but I do want to play this video anyway because I think we can relate it to Bitcoin as well. Watch this video and then definitely stick around, guys. We have more stuff to go over. I want to talk about one thing that could be a little worrisome short term, but why I'm not overall worried. But check this out first.
I don't want to say bizarrely, but oddly enough, you're starting to see stocks move perhaps in tandem with interest rates, or the idea that inflation is going to keep going. I'm a little surprised at what's happening here.
Oh, stocks have been incredibly resilient, and you can point to several reasons why. But the bond market is showing volatility that we have to respect. And look what's happening this morning. Higher yields at the short end. 2s, 10s is now flatter at 14 basis points. The yields on 3s, 5s, and 7 is higher than the yield on 10-year bonds. And all that is telling you that the bond market believes inflation is too high, the Fed is well behind the curve, and the Fed risks, as we heard, pushing the economy into recession as it tries to catch up.
And are you surprised, though, that the stock market has held up, given what you've been saying for the past couple months?
Surprised, no, but wary. Now, why am I not surprised? The initial conditions are very favorable. Even though financial conditions have tightened, they are still loose in historical terms, in absolute terms. Secondly, the consumer and the labor market is still supporting the economy. And third, as I said to you before, where do you go? Do you go to cash, where you're guaranteed a -8% real return? Do you go to bonds that are getting hammered? Where do you go? So investors look around and say, you know what, stocks may be the best place to be for now. It just needs to continue to withstand considerable macroeconomic volatility, rates volatility, and currency volatility. That's what the stock market is navigating right now.
So like I said, you can still apply this to Bitcoin as well, but one thing that could be happening, maybe is happening, we've only been hearing about this for 8 years now, but you guys know Mt. Gox got hacked back in 2014. There's about 800,000 Bitcoin that were hacked. And Mark Capellas, the exchange's former CEO, has said that the users of the platform could receive some of their lost Bitcoin in the coming days. He told Forecast News it was highly likely that the Japanese trustee in charge of the Bitcoin will begin the distribution of the remaining asset to the creditors. So there has been this fear of what happens if these people that had Bitcoin in 2014 just go look at the price of Bitcoin in 2014. Imagine essentially you were forced to hodl because it got hacked, and now they're offering to give it back to you. Do you think these people would just outright sell? I don't know. Or would there be a percentage of selling? Now, a lot of people are assuming that these people would just completely dump the coins on the exchange and it would crash the price. I don't think that would happen because I think that people that were into Bitcoin in 2014, well, maybe they were just using it to do things on the internet that they shouldn't have been doing. But for the most part, I think they had some kind of a belief, some kind of a trust for this new type of technology. So I don't know that they would be the kind of people that would just dump their Bitcoin. But I do think there would be some selling. Am I worried? Not really. Because like Will Clemente points out, in his opinion, he says we have yet to hit the tipping point of adoption, which likely stems from an external catalyst causing a flood into Bitcoin. Glassnode estimates there have been about 250 million unique users on the network, which represents only about 3% of the global population. Now, remember I showed you that video 2 days ago when we look at how this sort of S-curve happens for adoption. You see the first 10%, right, happen in about the same time that the remaining 90% or up to 90% happen. So in other words, let's say just for example, like Uber. I'm making this up. I have no proof of this data, but just as an example, let's say that, it took 5 years for Uber to get to 10% of the users that we have now. Well, it took 5% to get up to 90%. You understand what I'm saying? So it really, really starts to accelerate in the center. This is where the hyper growth is. So when it does happen, it's going to be fast. And everyone that's watching right now, guys, it's been exciting, but it has been a little bit boring recently. But ultimately, you are going to want to be involved. And if you're still wondering whether or not you should buy Bitcoin, I don't know why you're even watching this channel, guys. You know how I feel about that. I mean, just look at the crypto regulation world map as of 2021. So this is from Thomas Reuters, and you can see anything in the blue here is mostly legal. So Bitcoin cryptocurrencies for the most part are legal. Any of the yellow here, they're saying there is some significant concerns. Maybe there's certain restrictions on mining or trading or things like that. It's not a full outright ban. And then obviously we have this red right here, which is where crypto is mostly illegal. So you can see we essentially have all of the Americas right here. We have the UK here, and it is growing. And in fact, if you just want to have a little bit of a sentiment check, this poll that was given to, I think it was 2,000 persons. This was in the UK. So it was called The Future of Finance. According to this, they said 25% of those questioned believed that crypto will be the future of finance, even if they don't understand it. They do believe in it. And interestingly enough, if you come down here, it says that those between ages of 18 and 24 are the most enthusiastic supporters of cryptocurrency, with 58% of those in the age bracket having previously invested, and more than 2/3 of those surveyed had no regret about their choice, and 68% believe their investment had resulted in profit. So you can definitely see that the sentiment is changing, and you're seeing the younger generation getting into it too. There was a time where it was only millennials. It was only millennials really that were interested in Bitcoin, and now you're sort of seeing it spread to, Gen Z and those even younger than that. And I think that they're truly understanding the power of Bitcoin, and they definitely don't want to keep seeing their money devalued, right? So I do want to end on one little bit of cool news. So we do have El Cortez Ingles, one of the major, or Corte Ingles, it's a Spanish, whatever. One of the major Spanish retailers and distributors serving customers all over the world, and the third largest department store group by turnover, has reportedly set its sight on having its own crypto exchange. To this end, the group has enlisted Deloitte, one of the big four firms, which will help it develop a platform to offer the retailer's 11 million strong customer base a new investment concept. The decision is a result of months-long internal debate of the suitability of venturing into this world of alternative investments, and includes the creation of a new company called Bitcore, which will allow clients to trade digital assets like Bitcoin and Ethereum. So guys, I think we can definitely tell that times are changing. It is a new paradigm shift. We are seeing the love over in the UK specifically. We are seeing that, ultimately we have a lot of mostly legal adoption, mostly friendly crypto, right? Don't forget, even though this yellow is kind of in the middle, it's just, there's concerns, there's restrictions, but for the most part, it is looking quite bullish for Bitcoin and cryptocurrencies. And of course, getting back to, if I was worried about anything short term, it would just be coming down here, filling this gap. There's always the potential we overshoot it. So yeah, Bitcoin could come back down to around 44,500. Most likely will probably stop at around 45,500. Obviously we do have to pay attention with everything that's going on geopolitically, but I do believe that slowly and surely Bitcoin is in fact turning into more of a risk-off asset over time. We're not there yet, but I do think we are getting to that status slowly but surely. And if you watch the past couple videos I put out, these predictions, man. First, we had the $10 million prediction. Then we had Roy predicting a $500 million Bitcoin. I don't know if we're going to get a $500 million or a $10 million Bitcoin. I do believe we're going to get a $1 million Bitcoin in our lifetime. But either way, when you look at the upside potential, the risk versus reward, it's kind of a no-brainer here, guys. It's kind of a no-brainer. So that's it for me. Thank you so much for coming back to the channel. Make sure to use the code CryptoZombie. Actually, no, I'm sorry. It's just Zombie. Just Zombie. If you want 10% off, I will be in Miami Beach 6th to the 9th at the conference and at the music festival. And of course, guys, if you are looking to trade, definitely be safe out there. I don't recommend you use crazy leverage. And if you're new, I don't recommend you even use a real account. Use a test account. Practice first, get subscribed, watch these videos. We go over these all the time. And if you want to learn how to trade, check these videos that are popping up right here, right now. Until next time, stay crypto. And of course, peace out.